Welcome back to another video. Today we have none other than Steve Penny. He is our regular market analyst, researcher, and update every single Friday on your investments, on the economic and financial systems, on precious metals, gold, silver, mining stocks, uranium. And this happens every Friday to deliver the most value that we possibly can to you. So if you enjoy this and you like having Steve on, give us a comment right there down below and let us know that you enjoyed this. Give us a comment down below. Hit the like button right over there and right over there. That's the other way you can let us know that you enjoy this. And last but not least, be sure to support Steve's work. Right there down below is the free newsletter called Silver Chartist. The reason I had Steve on is because I went through the free newsletter and I was blown away. I said, Steve, this is better than most people's paid newsletter. This free alone is going to be worth a lot of money to folks. And I said, can you come on and do a regular market update for us? And so that's what we're going to be discussing here in this video. And I want to encourage you to sign up for free to Silver Chartist in the description and pinned to the comments right there down below. That's Steve's newsletter.
All right, guys, Steve Penny here. Today is Friday, April 2nd, 2021, with another guest post on Jake's I Love Prosperity channel. The goal is to do this every Friday, where we take a look at the charts for silver, uranium, and gold. Those are the three metals that I am personally laser focused on and that we focus the most on in the weekly Silver Chartist report. But we also cover my two favorite battery metals, which are copper and nickel. And this week we'll also take a look at platinum, which is really starting to look pretty compelling here. We'll keep this video pretty short this week as it is a holiday weekend. Today's Good Friday, so I want to wish a happy Good Friday and Resurrection Sunday and Easter this weekend. Hope all of you get to enjoy some nice downtime with your family. So with all of that said, really the big question on everyone's mind, especially in silver and gold, is the bottom in? Have we seen the worst? And I like to say I deal in probabilities, not predictions. And I do think it's highly likely that we probably have seen the worst. However, that doesn't mean that we just turn around and rally to the moon tomorrow. I think it's more likely that we start to carve out a base above the recent lows. Maybe at some time over the next month or two, start to resume that uptrend. And I think in times like this, it's important to ask ourselves, what got us into the metals in the first place? And have those fundamental factors changed at all? And for me personally, I did some introspection this past week, and really all of the things that drove me to silver and gold in the first place, those fundamentals and those catalysts are even stronger now than they ever have been before. So my personal conviction has never been stronger in this bull market. So let's go ahead and pull up some charts and we'll take a look at where we stand and what we might expect in the week and month ahead. So let's start off this week by taking a look at the CRB index compared to the S&P 500. And this compares a basket of commodities relative to general equities. And what we see here is that commodities have really never been so cheap relative to paper assets at any point in the last 40 years. And it looks like that trend is trying to turn around. And when it does, things typically don't just revert to the mean. They typically overshoot in the opposite direction. And I think this bodes well for a long-term, powerful commodities bull market in the years ahead. And I continue to think we're in the right sectors at the right time alongside the right people. Turning to a chart here for the dollar, sometimes I'm reluctant to post a chart of the dollar because a lot of people just automatically think, if the dollar's going up, gold has to go down. And that's not necessarily true. There's plenty of historical precedent for both the dollar and gold to rally in unison. I just look at the dollar more as like a headwind or a tailwind. Gold can still rise with a rising dollar. It's just a slight headwind if the dollar is rising. So what we see here in the dollar is price has reclaimed this 200-day moving average, and we really don't want to see this 200-day moving average begin to slope upwards because that puts a lot of the institutional trading algorithms that drive these markets into like a buy the dip mode. We don't want that. We'd rather have price below a declining 200-day moving average, and that puts those trading algorithms into a sell the rally mode. So we'll see if the dollar can hold on to its recent gains here. If you come up and look at this RSI, that tells you when things get overbought. The dollar is getting extremely overbought on this daily chart, and it's at least due for a pullback. All right, turning to a chart for gold, there's really two primary patterns in play here. And the first one is this 18-month symmetrical triangle pattern that you can see right here, marked out in green. And we're working our way towards the apex of that triangle pattern right here, and we're actually trying to break up and out of it. It looked like earlier in the week we might break to the downside, but buyers stepped in at the end of the week, and now we've closed above the upper boundary of this triangle pattern. So let's see if we can get some follow-through next week, and that would be very bullish. However, we're not really out of the woods yet until we break above the upper boundary of this red downtrend channel. That's the other primary pattern that's in play here. that all the traders, all the investors, anyone who looks at technical analysis is looking at this downtrend channel and probably looking at this triangle pattern as well. So really an eventual break above this red downtrend line right here will be very bullish and likely signal a retest of the 2089 all-time high in fairly short order. Now, I don't expect all of this to happen, like in the next couple weeks. That's certainly possible. The metals markets are certainly capable of really sharp moves to the upside, and that can happen at any moment. But just looking at the chart, I think a more likely scenario is we begin to carve out a base right around these levels, and then sometime over the next couple of months, we break above this downtrend channel, and then sometimes towards the end of the year, perhaps we come back and test this 2089 all-time high. Now, like I said, we could get back up there much sooner than any of us think, but I just try and be objective in my analysis. Here's a chart for silver. On Wednesday of this past week, actually on Tuesday, we plunged below the 200-day moving average on above average volume, and things were looking pretty bearish there for a minute. And I posted on social media saying, hey, let's hope that we can close the week back above this 200-day moving average. And that's exactly what we got. We got a really nice rally on Wednesday and Thursday, and we are back above this 200-day moving average. And just like gold has its downtrend channel, silver has its own red downtrend channel that you can see right here. And getting above that upper red boundary will be the first step towards confirming a technical reversal in silver. For those who have been following our work for any length of time, you know that we like to put a lot of emphasis on ratios because ratios can tell us what components of the precious metals complex are presenting the most compelling value propositions at any given moment. So I like to maintain full exposure to the precious metals sector, but I can rotate around in different components based on the ratios and what the ratios are telling us is the most compelling setup right now. And looking at this gold to silver ratio, over the longer term, we certainly see silver outperforming gold handily in the years ahead and in the months ahead. However, this gold to silver ratio has really come down really far, really fast, and we wouldn't be surprised to see a little bit of backing and filling in this ratio. And what that means is that perhaps gold is presenting a little bit of a lower risk entry point for those who are perhaps a little more conservative at this stage of the game. However, if you've got a longer term time horizon, I think silver's should outperform probably by a factor of at least 4. Here's a chart comparing the junior silver miners versus the junior gold miners. And what we see is last year, back in March of 2020, junior silver miners were just beaten to a pulp. They were the most undervalued component of the whole precious metals complex, and they've outperformed their gold mining counterparts by almost a factor of 2. And they are still undervalued, but just like that gold to silver ratio, it's come really far, really fast. So we might see a little bit of backing and filling here before the junior silver miners really start to outperform again, which we fully expect to happen over the next couple of months to next few years. Here's a chart showing platinum versus gold, and what we see here is that platinum is bouncing from ridiculously oversold levels relative to gold. This gold to platinum ratio was at a historic extreme, and it really still is, and I think it's very likely that this platinum ratio continues to move in this direction, and platinum could handily outperform gold. However, I view that as more of a speculative play. So I do have some platinum exposure, and platinum is something we'll be watching very closely. Here's a chart of GDX, the senior gold mining ETF, and just like gold, it's got this very clear downtrend channel. We've tried to poke our head above this downtrend channel a couple of times over the last few months, and they turned out to be false breakouts. You can see here FBO, that stands for false breakout. And here we are right now, you can see right here, again, testing the upper rail of this downtrend channel. So a break above that would be the first step towards a technical reversal, and then we would get confirmation if and when price reclaims this 200-day moving average, which is around $37.50 right now. On the downside, we've got really strong support here, right about $30. And, I continue to think that's going to hold. Sure, I could be wrong, but I think the most likely scenario is this $30 support holds. Here's a chart of SILJ, the Junior Silver Miners ETF, and I've personally been accumulating this one over the past couple of weeks, and you can see this very clear green support line right here, that every time this is tested, it just bounces right off it. And we came back last week, tested it pretty much to the penny, and bounced right off of it. And for our premium members, I send out real-time alerts whenever I personally buy or sell. So I sent out an alert to our members right as this green support line was being tested, and I added some shares to my long-term position. And I also have an open trading position in this one too that I alert our members to whenever I initiate a shorter-term trading position. So SILJ, it's reclaimed this 200-day moving average. Let's see if we can get above this 50-day moving average and this red downtrend line, and then this chart would really start to look pretty bullish. On the downside, I would expect this green support line to hold. If for some reason that were to fail, the next level of support is all the way down here around $12. And I would view that as a fantastic long-term buying opportunity personally if we do see that. Here's a chart for First Majestic, and I put this in here because this is such a clean chart. I've been looking at this 1457 breakout level since all the way back in late January when we had this powerful breakout that came on massive volume. And I was saying if we could ever come back and backtest this breakout level, that would be a really compelling entry point. And sure enough, we came back and backtested that almost to the penny on Tuesday, and we since bounced really hard off of it. There's also a really nice triangle pattern that's been set up. And whenever you approach the apex of one of these symmetrical triangle patterns, you can usually expect a sharp move in one direction or the other. And the break tends to go in the direction of the prevailing trend. And the trend is up in First Majestic. So sure enough, we got a nice breakout on decent volume. And let's see if we can get some follow through next week. But First Majestic continues to look good on the charts here. Turning to our two favorite battery metals, copper and nickel. Copper just continues to be on a tear. This is in a well-defined uptrend, and we're approaching the apex of this triangle pattern right here above a rising 50 and 200-day moving average. We continue to be bullish on copper. However, I would like to see some backing and filling, and I would love to see a sharp pullback for some opportunities to accumulate some of my favorite copper miners. The same goes for nickel. However, we did already see a really nice sharp pullback in nickel to just above the 200-day moving average. And I think the supply-demand fundamentals are extremely bullish for nickel over the intermediate to long term. All right, let's take a look at a couple of uranium miners. Here's a chart of the spot price of uranium. And you guys might remember a couple weeks ago I was talking about how the spot price was deeply oversold right as we were testing the lower boundary of this green uptrend line. And sure enough, we've rallied really nicely in the spot price of uranium. However, we're still only about $30. And that's nowhere near high enough to incentivize the new production that's needed to meet this growing demand for uranium, as nuclear is a growth industry. So that spot price is going to have to continue rising. Here's the URNM ETF. This is my favorite way to track a basket of quality uranium stocks. And we are hovering right near the all-time highs. On the weekly and monthly chart, we are still a bit overbought on the uranium sector. However, on the daily chart, that overbought condition has been worked off, and we broke out of this small little triangle pattern right here on Thursday, and it looks like we're probably going to come back up and test this $62 to $64 level again. And if we can break above that, uranium could really move to the upside. Here's Cameco. This is the blue chip of the uranium sector, and you can see right here, price came back and back-tested not only its 50-day moving average, but the lower boundary of this very well-established green uptrend channel right here early in the week. I actually went ahead and initiated a trading position, and I sent an alert out to our members when I did that, and we've rallied really nicely into the end of the week. Let's see if we can continue to rally up towards the upper boundary of this channel, and 1971 would be the initial resistance level to watch. For support, we've got this green line here and the 50-day moving average. Below there is support around $15. Here's a chart for Denison Mines. This is one of my favorite uranium miners. We actually did a nice write-up on Denison in last weekend's premium edition of the Silver Chartist Report. And I went ahead personally and added shares last week as we broke out above this symmetrical triangle pattern. I think Denison looks really good here. We could easily come back and retest this $1.81 high, which is a long way to go. You know, we're just coming off support at $1. So this one's pulled back really nicely and is less overbought than some of the other uranium miners that we track. Another uranium miner I watch really closely is Energy Fuels. This one last week came back and back-tested this 50-day moving average and then rallied off of it. So let's see if we can continue higher. Initial resistance here is $7.83, which was the recent high. And you can see how price tends to just respect these moving averages. Look right here, this 50-day moving average, we bounced right off of that last week. The last time we tested it was a couple weeks ago, came back and back-tested that 50 and bounced. And you would see the same thing if I went further back on this chart. These moving averages are really powerful, and technical analysis does not have to be as complicated as many think. What I found personally is that simplicity outperforms complexity 100% of the time. All right, guys, like I said, we'll keep this one nice and short and sweet. I would encourage all of you to go get our free report. It's delivered every Sunday. You can get that at silverchartistreport.com, where our goal is to provide tons of value for free each and every week. I look forward to seeing you guys next Friday. Have a wonderful weekend, and God bless you.
Okay, thank you for watching this video. So if you enjoyed this and you want to see more regular market updates from Steve, from Silver Chartist, be sure to hit the like button on this side right over there and this side right over there, and leave a comment down below and let us know if you enjoy this. If so, we'll keep making more of these. Now, I want you to go to the link in the description, in the comments right there down below. That's to sign up to Steve's free newsletter. Like I said, I had him on because it's literally the best free newsletter that I'd ever seen. And I said, Steve, I'd love to have you as a regular market update. And we're gonna create the most valuable sector that we can on YouTube to help as many people as possible. And so if you want to take it the next step, learn mining stocks, really the in-depth of what's happening in mining stocks, in gold, in silver, in the overall financial markets, in uranium. If you want to see this all broken down, that's the Silver Chartist newsletter. There's a free link to it right there down below in the description and pinned to the comments right there down below. Last but not least, hey, thank you, Steve, for coming on here today, educating and informing us on what's happening in the world.